Rebecca Walser is with us, President, Walser Wealth Management. Thank you so much for being here.
Glad to be here, Nicole.
The excitement of the New York
I know.
Stock Exchange.
It's loud.
So what we're looking at today is a rally. This market was lackluster in the morning, in fact, a little bit to the downside. You get this CPI print. The ex-food and energy print, the annual rate was the smallest increase since September of 2021. Does this say the Fed's done hiking rates?
Well, the market certainly thinks it is, right, Nicole? And I think that, the market has been premature before. So I do think that with this, unless we get a very different read in the future, I do think this is definitely an indicator. We were only at a 26% CME watch before that we would get any kind of hikes. And so I do think this is going to go in that direction. However, that being said, the market's been wrong before, Nicole. Remember, we had a lot of pressure last year even to start cutting rates, and that wasn't going to happen. And I think I noticed Powell and even some other Fed Pres members this past time when the market was starting to talk about cutting as early as June, that they came back and said, look, if we're going to be data dependent and we have no problem going back in and raising rates again. So I don't think they're going to back themselves into a position, and the data's just too fluid right now. But yes, this looks good.
What do you think about the soft landing concept?
Well, I mean, I think the whole world and certainly Wall Street wants to declare that it's here and it's over and we've moved on and there's not going to be a landing of any kind. We're fine, And the fact is, Nicole, we just have such a bifurcated market. We do have good economic data that keeps coming in, and I think it's obviously due to a strong labor market, but we are seeing some labor softening. And I just caution everybody that the overall global macroeconomic picture is not great. And so how is America going to have this beautiful recovery in a market that's growing with a cost of capital that's 3 times what it used to be? There's just so many things that we still have to work out. And Home Depot is a great example. It came out, double beat, but then it started going down because if you looked at the guidance, they actually upped the guidance to have a lower sales forecast for 2024. So they're starting to see consumer retail problems, and I think now it's up, but it's up because the whole market is up because we're really thinking the Fed is done.
Right, and then we look at the different components within the CPI. Any thoughts there, whether it's shelter or gasoline or food?
It is shelter, let's be honest. And the concern I have for that is, even though that is a positive in this report, we have a shortage of shelter in the country, and we know that. So it's going to be rotating back to the other. So we'll see.
And then, what's your advice to investors here? You have a market that has taken off. You're having the best day for the NASDAQ since April. Friday was the best day of the NASDAQ since May. I mean, we've had a pretty great run since the end of October because August, September, October were pretty tough.
Absolutely,
what do you think now? Where are we headed with the market?
I mean, we turned negative in July. Obviously, this has been a great run so far in November. And I would just say, Nicole, we have to be careful about retail. Let me give you one barometer that I'm looking at that really makes an impact. The retail seasonal labor force is 40% less for new hires than it was in 2021. And I like to compare to 2021 because 2022 obviously was just off terrible year last year. So when we go back to 2021, we had a decent year. That's when the Fed was still saying that inflation was transitory. And we have 40% less hires on the retail side. So that indicates to me that retail knows that we're not going to have a great shopping season. We've had other toy makers come out and say, we're not seeing a great season. And so let's just not get ahead of our skis again and declare everything's great, because I do still see a lot of headwinds.
There's still a lot of folks who are hot on the Magnificent Seven saying buy. They like that group. You had Home Depot today, which was a win. Fisker's selling off in a big way. I mean, there are a lot of story stocks. Real estate and utilities, in fact, are the best 2 groups today. Every single sector is in the green. Are there certain sectors that you do like?
I mean, I would be more cautious still because of the global macroeconomic picture. And so obviously when you're more cautious, you want to stay away from anything that is based on retail and based on the consumer, and you want to look at more utilities, more like commodities, things that are necessary. But that's a hard run too, because look at the price of oil just with everything that's just happened. It's really depressed. So it's really difficult to get a safe place right now.
Yeah, I mean, that's absolutely true. I mean, at least you have the dividend payers.
Yes, exactly. So if you're looking for cash flow, for sure. But for CapEx growth or for long-term growth, I mean, it's a hard pick right now.
Is there still a place in a portfolio for bonds?
Wow. You know, I feel so bad for bondholders that last year, the worst year since 1788, then we come to this year and it's up, down, all around. And bonds are like, are we leaving Bitcoin to go to bonds because the yields are high? Oh, now we're leaving bonds to go back to the stocks because the yields are coming down because the Fed is done. I mean, investors are just so confused, as they should be, because the data is bifurcated.
Right. It's great to see Rebecca Walser of Walser
Love
Wealth
being
Management.
here.
Thank you so much for being here today on a big day, inflation print day, and we'll get the PPI, of course, tomorrow. We'll be getting that.